If you're dreaming of a home, but you're puzzled about where to start with your finances, we came to the right place. So let's dive into the documentation you'll need to secure your mortgage of the home of your dreams. So, first thing your lender's going to need is to trust that you could repay the mortgage. So, that's where we need to have proof of income, and that's where it comes in. It's like your financial handshake. It shows lenders that you're a safe bet. So here's kind of typically what lenders are going to need to gather as far as your documentation. First, bring your tax game. You'll need 2 years of tax returns and W-2s and 1099s if you have them. We'll also need K-1 statements or business returns if you're self-employed. This shows lenders that your income is on track historically, and then there's other documents that will show what it is ongoing. So number 2 is pay stubs. You have to have your pay stubs in line. This complements your tax returns to show your income is still going on strong and continuing. And then number 3, profit and loss statement. So if you're running your own show and you're self-employed, those folks need to bring in their recent profit and loss statement. This proves the business income is stable. Number 4, letters of employment gaps. So life happens, and you might have a break of employment, and a simple letter of explanation of the situation can really make things go a lot smoother. And if you're unemployed, so number 5 is unemployed transcripts. So if you're unemployed, benefits, bridging any gaps, make sure you have the gaps there, especially if you're a seasonal employee. Sometimes if you're a seasonal employee, you get unemployment for periods of time, and that's just how it works every year. Make sure you talk to your lender about that up front so there's no surprises. Number 6, real estate income. If you're renting out properties, make sure you have a document on your tax returns and you bring lease agreements in. If you're not showing it on your tax returns, that could be a problem for a few different reasons. And I won't get into the tax reasons, I'm not a CPA. But for lending, if you don't have it showing on your tax returns, it's really difficult to show it. Now, there's a few reasons that you can actually, if it's not shown yet, so let's say you just started renting out the property this year, and you just haven't shown it because you haven't filed taxes for that specific year yet, or if the house was being renovated and it was out of service during that time and now it's being rented, there's reasons why it may be okay for it not to show in your tax returns. But generally speaking, it needs to show on tax returns to be able to use it. So you want to have your tax returns ready and you're showing your rental income to be able to use that to support qualifying for another property. The caveat there is there's programs that could help you qualify without tax returns. They're all going to be based on your rental income. So in that case, you definitely will have to supply lease agreements for that. And those are called DSCR loans or debt service coverage loans. And those can be really good for people that want a non-traditional loan. Maybe they don't have this other documentation that we're going over, but they have really strong rental income. That could be for you if that's for you. Number 7, child support or alimony. If you're receiving consistent child support income or alimony, that actually counts as income. So it's important to have that. You don't technically need to disclose that income, but if you're paying it, for sure, if you're paying child support or alimony, that will come up a lot of times in lenders. So make sure you're upfront with that. If you're paying it, for sure, and if you're receiving it as income, it's up to you. You can disclose that income and you can show that to help qualify for the loan. The caveat there is there's timelines. So if your child support is running out in the next year, you may not be able to do it. Rule of thumb is you're going to need to show about 3 months of paperwork showing that you received that child support or alimony. So you're receiving it on the front end, and then you'll continue to receive it for 36 months, at least 36 months as of the home closing. So obviously, if the kids are getting older or alimony is running to the end, you'll want to talk to your lender about it to figure out if you can use that income or not. Very important you look at the timeline. And then lastly, don't forget about Social Security income or disability payments or retirement. It counts towards your mortgage qualification. And one other pro tip is you can actually count 401k funds or even non-retirement funds in some cases as income. So make sure you talk to your lender about all your assets, not just your income as you think is income. Next up is your down payment. Make sure the lender knows where your down payment's coming from. Bank statements, gift letters, have them handy. So different loans have different rules. So make sure you kind of have your documents in order in all pages. And then lenders also want to take a peek at your savings and your asset, all your savings and assets. So if there's a way to ensure that you can keep, up with your payments if things get rocky, the bank statements are that way. So bank statements, retirement accounts, investment funds, even if you don't use it for qualifying, sometimes it can help you get the best loan. So make sure your lending professional looks at all of that. And if they don't ask the questions around that, you might want to get a second opinion, because sometimes having more assets can get you a better loan, possibly better interest rate, better loan setup. And then your credit report. Credit report is like your financial report card for your credit. It's a good idea to know what's on there before the lender pulls it. We have a note on our website that you can go to freeannualcreditreport.com, and you can actually go there and get a free credit report. So we recommend getting in ahead of time. Try to stay off the services that that are going to try to sell you a bunch of credit debt to monitor your credit. I know a lot of people use some of those, so we have some tools that work out well, and they don't show your credit being pulled. And then special situations, like if you've been through bankruptcy or foreclosure, just understand there might be options for you. So just make sure you have all your documents in line, though. It's extremely important to have your dates and documents accurately set up, because if you're off by 6 months or off by a year, you might even get a pre-qualification letter from a lender, but you're not actually qualified because maybe you gave them the wrong date and they didn't verify when the bankruptcy was actually discharged. Maybe it was the file date. So get your dates in line if you have it. There are options for you. And then, starting to compile these documents, starting to compile early on. Put them into a Google Drive or something central location, something secure that you can have and you can go back to and have all ready for your lender. So it might seem like a lot, but these documents are key to unlocking your dream home. So if you have any questions or need anything, my name is Kevin Brierton, certified mortgage planning specialist with Neo Home Loans and the Kevin Brierton team here in Scottsdale, Arizona. And we are so excited to be your no excuse lender and really help you through a no excuse mortgage process. We want to be here not only for the early stages of homeownership as you're entertaining and watching this right now, and then we want to be there during the process. But a lot of lenders, where they go wrong is they're there for the first 30 days while you're under contract, but then they forget about you for the next 30 years. We want to be here not only for the next 30 days, but also for the next 30 years. So you're a successful homeowner. And we've built a no excuse process to ensure that happens every time. Reach out to me, schedule a mortgage strategy call by going to mortgagestrategycall.com, mortgagestrategycall.com. And I'll put that on the screen here. Again, that's mortgagestrategycall.com. You can click there, schedule a time with us, and one of my team members or myself will jump on the phone. No credit pull needed, and we can help you through your options. And we're so excited to help out. Thank you so much for watching, and we will catch you on the next video. Take care. Bye.